Hey guys, welcome back. In today's video, we are talking about AMC's real price, short lying, the dark pool manipulation, and many more in this video. Firstly, we're taking a look at this. AMC is at 1/10 of Cinemark's stock price value. The movie industry as a whole has Cinemark, IMAX, and others benefiting from the movie theater industry, except of course, for some reason, the one and only AMC. No way in hell this is trading at real value. This is not real. So when you take a look at the price of AMC and Cinemark, you obviously see the difference. Now, I want to talk about in terms of you should look at it from a market cap perspective and not in terms of the price, because Cinemark is not 10 times more expensive in terms of market cap than AMC. The actual market cap is around 3 times bigger than AMC. Obviously, it's because of the outstanding shares that you get a difference in the price. But nevertheless, it still doesn't, go away from the fact that I do think AMC is extremely undervalued. I think that AMC has not benefited from the movie industry recovering as opposed to IMAX, as opposed to Cinemark. Something that we've shown in the past before is understanding how both IMAX and Cinemark has seen, well over 100% return year to date, but AMC haven't because of the fact that it's being suppressed. When you take a further look in terms of the institutional ownership of Cinemark, you can see that it's 126.13%, whereas for AMC, supposedly it's 43%, but we know that that is very far off from what it actually is. It's very likely that institutional ownership for at least the real shares of AMC should only be around from 5 to 10%. And so going back to this in terms of, I think the stock price value is not what we should be focusing on. It should be the market cap, but it's to understand that we are definitely undervalued and we are not recovering and benefiting from the box office, whereas other cinema stocks are, but they are also largely institutional owned. So definitely something's going on here. Because when you take a further look at what's happening, at what the shorts are trying to say, at what the data they're trying to present to people, this is what you can see. AMC shorts keep covering. AMC short interest is 144.7 million, 46.22 million shares shorted, but we've seen 3.3 million shares worth $10 million bought to cover in 2025, a 7% decline in total shares shorted. AMC shorts are up plus 39 million in 2025 year-to-date mark-to-market profit, up plus 21% for the year, but we're seeing some short sellers cashing in their chips and looking for greener pastures elsewhere. Now, straight away, again, what I want to talk about here is the short interest data in which we are given, we have always known to be not accurate, because it doesn't talk about offshore, it doesn't talk about the non-reported, and at the end of the day, it is only self-reported data. So these numbers could be extremely skewed, and we don't know. But one thing we do understand is that they are not accurate as they're supposed to be. Because when you also take, and you can see what this guy's saying here, you're truly conflicted. 70% of AMC is being traded offline. The market makers are mismarking trades. They have been penalized for it 4 times in the last 2 years. So they're saying that AMC shorts are covering. They're saying that AMC shorts are making money because the price is declining. But what they're failing to say is, firstly, like we talked about, the data is very likely to be not accurate. But second is the fact that all of these trades have been done in the dark pool, and therefore we're not seeing AMC's price going up. And so the AMC price going down is clearly not something that is natural. And so are shorts actually making money, or are they trying to make it look like they are making money? But it's also the fact we've seen in the past, companies and institutions have been fined because they've mismarked short trades as long trades. And again, if that is the case, and that is very likely to still be the case, then what we're seeing here as supposedly that the shorts are quote unquote covering is very likely that these are just being marked as longs, that there are some short shares that are not being registered and accounted for, and therefore, again, shorts are lying about the fact that they are making money. Instead, they just want to give you the incentive to obviously sell your AMC shares, because we know that that's something that they've been trying to do the whole time. Because when you take a further look at what's going on, now when you take a look at the order book, and you can already see the difference. So this is Amazon order book, and you guys can see here, very normal. Now the price, the spread is only by a tiny bit. But you take a look at AMC, so the price difference is extremely big. And when you take a look at the bottom, you're seeing firstly 0.9, 0.0001 orders coming through. And for over here for the ARS, you're seeing 199,999. So when you're seeing that AMC is constantly experiencing spoofing, is always experiencing these dark pool trades, clearly something is not happening. Clearly something in terms of actual market behavior is obviously not being reflected in AMC. And so going back to here in terms about have shorts covered, well, in my opinion, I don't think so. Are shorts making money? Well, again, with what we've seen, it's even more likely that it's a no. And so, you know, in terms of are they looking for opportunities elsewhere? I don't believe so. I think that they're still trapped in this play, and that they're trying to find ways to obviously recover from these plays. Because you can see also here, 5,000 GME order after hours get routed via dark pool, but a large sell order hits the tape. It's so obvious they're trying to pin the price. The question is why? So obviously the same applies for GME as well. You're seeing a massive buy order and it's in the dark pool. So when this happens, despite the fact we had a value of 500,000, it wouldn't have any effect on the price. When you see this 205 order that's coming through, that's hitting the lit exchange, it would have an effect. Now, normally when you take a look at this, you know, if both were to hit the lit market, the net will still be positive because it's a bigger buy volume. But because of the fact that one's in the dark pool and one's in the lit exchange, only the one in the lit exchange will have an effect on the price. And that's what we are seeing. So clearly, like we talked about, something obviously needs to be talked about here. Another thing, yes, the magical disappearing / reappearing shares of GME, 2 million available, then 1.3, then 2 million again. Feels like a hedge fund trying to find loose change under the couch to pay rent. How's that supply and demand thing working out? And what we can see is that when you take a look at both AMC and GME, we've just talked about in terms of all of these shares that are just reappearing, disappearing. We're seeing these dark pool trades happening. We're seeing these large spoofing, these order books that we're looking at. You know, we're seeing how they're mismarking trades. And these are all happening for AMC and GME. And the question is, why are they doing this? If shorts have supposedly made money, if shorts are no longer trapped in this play, why are all of these methods that are used for the sole purpose of bringing down the price of these stocks, why are they being implemented on AMC and GME? And again, obviously the answer is very, very obvious here. It's the fact that they're still trapped in here. And when you take a look at in terms of the overall and why I believe that, and this applies for both AMC and GME, and it's for why the price should be higher. Well, firstly, for GME, out of 567 institutions who hold GME, 540 are long and 8 are short. Is that bearish or bullish to you, as you guys can see here? And you got 19 that are long, both long and short, obviously hedging. And what we have seen here is that the same applies for AMC as well. When you take a look at AMC, what you will find is that the institutional ownership is obviously increasing. The institutional accumulation is also increasing. So we're seeing massive people, massive institutions buying both AMC and GME. And again, that's why I believe their price should be even higher. And another worrying thing for the shorts is that the Federal Reserve has timed emergency liquidity in the bank term funding program to hit zero right when the market implodes. So what we're seeing, again, this goes with reverse repo, this goes with what we've talked about in the past, is essentially we're seeing so many indications right now of liquidity running out, of margin being, of course, hitting, being margin called, and firms running out of money. When you take a look at the indications, firstly, we had Citadel supposedly making billions of dollars, yet they had to take up loans, yet they had to sell bonds in order to raise money to pay back their investors. So that's firstly a reflection of how the short sellers are doing, not good. Then we have the reverse repo dropping below 100 billion and it's staying below that 100 billion mark. So that's a reflection of the lack of liquidity, the illiquidity problem that's in the market. And so all of these are obviously showing why the shorts will fail. And kind of the nail in the coffin here, and I believe that this is also a big catalyst, is that the first short firm show filing deadline is February 14th, 2025. And this is for when firms that has a US dollar value of $10 million or more have to report their short positions on a monthly basis, obviously bringing transparency, and that's what we want to see. And you guys, thanks for watching. I'll catch you guys next time.